So welcome to another edition of K Property Insights podcast. Today we have one of the leading property analysts in Australia, Michael Matusik, joining us. K Property Insights is specifically designed to give information and education to buyers, sellers, investors and property developers on the Gold Coast and Southeast Queensland markets. Michael, welcome. Thanks for joining us.
No problems. Thank you for inviting me.
So probably the first question that we get asked daily, and probably you as well, is how's the market?
Well, the market's very good if you are looking to sell. It's not so much if you're looking to buy because prices are rising, and that's to do with supply and demand. So real estate's all about supply and demand, and on the Gold Coast particularly, but elsewhere in Southeast Queensland and many other parts of Australia as well, you've got high demand, even rising demand on the coast, and sliding supply. And that supply is sliding in terms of the amount of property for sale, not only in the resale market, but also in the new market, because a lot of the new projects are very difficult to make work in terms of building costs versus value for money, in terms of apartment or townhouse purchase. And there's virtually no land supply left for detached type housing. So demand's high because of population growth, because of baby boomers wanting to move out of Sydney, Melbourne, and even overseas and settle into a place like the Gold Coast. And the Gold Coast is quite attractive to that market. So the demand is elevated.
Yeah. And so I guess when you're talking about the new projects and the construction landscape there, even if you can make some of these projects work, unless you're vertically integrated with your own team, it's becoming quite difficult even just to source a builder because of the amount of public infrastructure works that have absorb most of those tier ones.
Yeah, very much so. If you're building anything of size particularly, and I would say argue of quality as well, then you want an established builder to do that for you. Somebody with street cred who's done it before, and a buyer will look for that. And they're very difficult to find because COVID's cleaned out a lot of them in terms of business failing, because the amount of infrastructure that's being built in Southeast Queensland, not only because of the Olympics, but commitments by state government. They've been attracted to those projects because the builders are getting and tradies are getting paid a substantial high rate. And also we have it's got a lot of press. We have some union issues, and some of the people who could go up to, say, tier 2 don't really want to have that issue with the builders, so that they'd say, we're not doing it. So it's very difficult for a developer, not a developer builder, but a developer who may have a fantastic book and financial backing to find a developer, a builder.
Yep.
So, there's things that have sold, haven't started building yet, and I could argue probably won't even actually be built because the price per square metre can't be achieved in the rising build costs in terms of the profit to the developer.
Yeah, and I guess another trend that I'm noticing is that you're seeing those construction jobs actually drag on. So they might have had an initial forecast of 2 years to build a tower, and that seems to be blowing out closer to 3. So ultimately that then absorbs a lot of profit, additional cost, creates more risk, and as a result we're seeing that supply not being delivered to market quick enough.
Yeah, and quite annoying to the buyer because it's another, year to 2 years sitting on their, on their hand, so to speak, renting or whatever until their new home is because most of the things that are selling to this market because of the price point are owner residents, and they have sold and things like that. And that's the beauty of buying off plan or early in the processes because they have time to actually sell their house, move and all those type of things.
Yeah. And I guess, look, for many years now, you've been a few decades at
yes,
doing this.
Yes, it does show a few decades, yes.
And a lot of leading developers and investors have obviously turned to you for advice on markets, on trends, on cycles, and so you provided a lot of support to them over the years. And I think now the Gold Coast market has probably matured a lot through this cycle, and it's probably an opportunity to explain to people what has occurred since the global financial crisis and how the market has changed here and why the Gold Coast has moved from what was always a boom-bust market, and explaining why that was to what it is now, and and how it may or may not be impacted by any other economic effects on a national scale. And so if you could just talk a little bit to that. So
no problems at all. Yeah, the Gold Coast, look, I've been doing this for 30-odd years, and I used to work for a company down here called PRD, which was sold to Colliers. There's still PRD franchises, but it's not the same thing. Yep. And so I was involved in the research division and things like that. And, it used to be very boom-bust because the pillars behind the Gold Coast economy were only a couple. It was tourism and there was construction, and then it started to run out. And a lot of it was to do with size. So there's an economy of scale. And so when the place comes to 700,000 people and growing to probably to 800 to 850 by the time the Olympics come around, when you've got, I think it's 4 million, 5 million tourists a year and growing, and you've got then that infrastructure that's needed to support that, it lifts up to another scale. So you've probably got 8 to 10 pillars holding this economy together. And it's a big place. I mean, it's one of the largest economies in Australia in terms of regional sense. It's one of the largest capital cities. Capital cities bigger than a regional towns. It's bigger than a couple of capital cities. So it's got a lot of growth. You've created a lot of businesses even since COVID. And during COVID, if COVID happened 20 years ago, this Gold Coast would have really struggled. It would have went backwards by rate of knots. It was difficult, but it bounced back pretty quickly, and it's still growing. It's got some constraints in terms of particularly building, which, as I said, if you're an owner or a seller, that's a very good thing. It'll continue to grow. I think the housing types will change. I think you'll see more apartments. I think you'll see more infill. I think you'll see those people who can afford the lifestyle and they can afford the premium. But I think you're going to see a lot more smaller apartments and things like that in the South Ports and those type of areas. So you're going to see a densification of the area, which the natural resources and so forth are strong and are supporting a very strong, particularly a migration movement from Sydney and to some degree Melbourne.
Yep.
So it's a very strong economy. It's bigger than most people think. Looking forward, I also think that the things that affect the global economy and places, big places, Sydney and Melbourne, will affect here, which is a good thing. It's not got the extra layer of volatility that it had once before. So, if you had a tourism downturn, everything shut down. So when I don't think interest rates will rise. I think they'll fall. We'll maybe talk about it soon. But when things happen that go awry economically, yes, the Gold Coast is going to be affected by that, but nowhere near as much as it would in its past.
Yep. And I think the trends that we're seeing, albeit we operate in more of the mid to high end of the market, but most of our buyers and transactions are all cash.
Really?
So there'd be somewhere in the vicinity, I would say, of 85 to 90% of the businesses' transactions that wouldn't actually have a valuation prior to settlement. And obviously, some of the data that we look at through PEXA and other things are showing that 4217 and 4218 postcode were the highest percentage of cash settlements in the country last calendar year and the financial year before that. So, and typically that is, I believe, as a result of people moving from interstate, selling out of a large home, buying something up here for half the price and then looking to retire, as well as the maturing market that we've seen here on the coast and people now buying within their means.
Yeah. It's interesting because when people say to me, well, interest rates have risen so much, but still people seem to be buying property and the demand therefore is high and it doesn't compute. And statistically across Australia, nearly half of the transactions since COVID, or since interest rates have risen, have been what you're calling cash. So they're not going to the bank to borrow. They might have to sell something. They might have to sell 2 properties. They might have to draw on their super or draw money, transfer from a business or something like that, but they're not taking out a mortgage. And therefore they're not relying on valuation and therefore, so interest rates impact on them is very small. Yep. So it's interesting to say that in the areas that you're working, it's even higher than that. That doesn't surprise me broadly because one thing that's happened with prior in COVID when the interest rates dropped was baby boom, the first oldest baby boomers started to turn 65. Yep. So we're also in this growth period of the next it's been happening for a couple of years and will happen for the next, say, 5 to 10, where that market who's done well will actually look to enhance their lifestyle. And that, I think, will be another driver to price growth and potential price growth in places like the Gold Coast, because demographics do shape a lot of things.
Yep. That ageing population has sort of underpinned most of the growth that we've seen. So we're also seeing the cost of living on the Gold Coast has been predominantly cheaper than most of your capital cities, which
Correct.
is also another driver for families moving out of Melbourne, Sydney, and relocating up here, putting their kids in school. And then the trends that we're also seeing have been through remote work. So with advancements in tech, AI, and people being able to work remotely, that has obviously created a set of circumstances for people to relocate into a city like the Gold Coast for lifestyle, for climate, and for affordability.
Yes, I've argued for a long time, if you're going to work remotely, I work remotely in Tasmania because I'm weird and I like cold weather and everything else. But I'm an example of that. So we had a farm in Tasmania. We moved to it just before COVID. We decided to stay because whilst I travel and do these type of things and so forth, and I have to look at development sites, I do this, and I could do that anywhere with good internet connection and Zoom. And you could also argue, if you like the coastal lifestyle, and particularly if you're in a place which is becoming more crowded and increasing in issues, there's no reason why you would say, let's go to the Gold Coast, because we can live that lifestyle that we used to holiday in, and we could work remotely.
I was talking to a client of mine who's CEO of a publicly listed company on many stock exchanges, and he said in 2019 he travelled for nearly 10 months of the year, and then post-COVID he now travels 2. So, and that's because of the ability to work remotely, how it's just become a common practice now to do meetings over Zoom and Teams, and everyone's really got used to that type of business, as opposed to having to turn up for a meeting and fly from country to country to country. And I think his business is in about 40-odd countries. So it's you've seen those changes in all sorts of businesses, which has also helped shape and form, I believe, the growth that we're seeing. And then coming back to your other point there, obviously I've been around now I started in real estate in 97, so I've been
impossible. People, look how young he looks.
But in doing that, we used to see there was significant land supply around, and a lot of our market were discretionary purchases, so they were holiday homes and secondary assets. And so when a market contracted interstate, the first thing to go was the holiday home when people needed to get money. And so we saw this through an economy where the market would run hot, and then ultimately when it turned and turned pretty aggressively. So whereas now we're seeing a large portion of our buyers have either migrated or they're people that are downsizing from houses to apartments, and so you don't seem to get a lot of the investors that are coming in, or if they are, they're buying a secondary home. They're a baby boomer, and that's spending 6 months of the year in Melbourne, 6 months of the year up here.
Yeah, I agree 100%. It used to be also that, if the asset that you sold, particularly if things went bad, stock market, what we've seen recently, changes, and we'll call it a crash, but a correction affected by, a handful of stocks in the States. But and that used to then see, the bank managers saying, look, you've got a problem, and you're going to sell your Gold Coast apartment or your, Nerang townhouse or whatever, because you need to get some cash flow. Those things, they might apply a little bit, but nowhere near as much as it used to. I think one of the good things is that it's still relatively cheap to stay Sydney and Melbourne to purchase here, rate per square metre, in price point, so forth. But it's not as cheap as it once was in terms of, so you haven't got people say, I went to the Gold Coast, I went on holidays, I bought 2 house of land packages, I did it on I was minus 5%. I didn't put anything down, and I was told by the spruiker that, we'll make 100% in 10 years, so it's all going to be fine. That conversation's generally not there, and it does take a fair bit more grunt, and the banks won't let you do that anyway. But yeah, the nature of the purchasing has changed here. And, I think that will continue. In fact, as I said in the introduction, the land supply, particularly for houses, is so tight. And it is controlled by 2 or 3 developers / developments.
Yep.
And one of them in particular has no appetite to subdivide.
Yep.
He will sit on it and make money and carve it up, which is not good if you're a first home buyer and looking to buy a piece of a house land package, but it's the way that it is.
And we spoke briefly, and we're going to elaborate. So how do you feel other economic factors are going to impact price growth and the general economy now here on the Gold Coast? Understanding it has matured, but inflation, interest rates, unemployment, change of government, are those things going to have an impact on growth or lack thereof?
Broadly, no, because the fundamentals of real estate, supply and demand.
Mm-hmm.
Yes, I think you're going to see a change in government on a state basis in a couple of months' time, and that's probably fair. I'm not being politics, but I think that's fair after 12 years or whatever with Labor in power. Whether or not that sees some major changes, but he is from the Gold Coast, the potential new premier. He summed it up at a meeting presentation he gave a couple of weeks ago, which I attended, as it is an aspirational city. And I think that that's a good summary of the Gold Coast. I do think interest rates will fall. I think they'll fall faster and sooner than the talking heads are saying. And that's because unemployment, particularly for small businesses in the private sector, is very hard. So three-quarters of the jobs are created in government-aligned businesses. You read about it in the paper all the time now in terms of, no productivity and all those type of things. So whilst it's an inflationary target, mainly from the Reserve Bank, they can't ignore the unemployment situation. In fact, they're supposed to take a dual role. They're jawboning at the moment. I would not be surprised that we see interest rates fall this side of Christmas small and then continuing next year. Will that increase demand for the type of properties that you guys list and sell and specialise in? Probably not much. I think that will continue. It might get some first home buyers to move. And so overall, I don't think there's going to be any major changes there. In the world scheme, Australia is, yes, we haven't had a recession for a long time. I don't think we'll even technically have a recession, 2 quarters of negative growth. I think it's going to slow down a bit into next year. But that still isn't affecting the person who lives in the west of Sydney who's got, $3 million, $4 million worth in 2 houses or something like that, great equity, is 55, 56, kids have finished university, they want to come to the Gold Coast, they're attracted to Palm Beach, Burleigh, whatever, and they end up buying there and they not retire, they retread.
Yep.
And so they do something different based here. They might have to fly back to Sydney and everything. Well, there's a great airport here. They can get to Brisbane if they have to, all those type of things. I don't think that's going to have an impact moving forward by what generally is likely to happen in the world. Of course, if something goes bang, big time, then, all bets are off, but who knows about that?
Yeah. Okay. And so you're basically saying that the outlook for now until at least 2032 on the Gold Coast is quite promising, failing a black swan event on a global scale that puts us into another world war or something.
We better knock on some wood. And the black swan is and I don't think even then I don't think there's a white rhino neither. So there's nothing slowly creeping up. One of the positives again is there is a white rhino, but it's a positive thing is that our aging demographic, and the fact that the Gold Coast is what it is.
Yep.
I mean, there's not many places in the world where you can particularly talk about that somebody who lives to west of Sydney, or somebody who comes from China or Hong Kong or even Singapore or in even the States, where the quality of the beaches there, the quality of the hinterlands there. Yes, the locals, the traffic's getting more and so on and so forth, but it's not we got here we drove some distance and it was pouring with rain and we got in pretty quickly. Yeah. We did drive at 8 o'clock. We was here at 9:30 or whatever, so there's some things like that. But the tick the boxes of I can breathe the air, it's safe, the crime relative to other places is very low. I could get to the hinterland. I can get on an airport.
Improvements in infrastructure.
Infrastructure improvements through the roof.
And quality of restaurants, retail,
very much so.
dining, and And all of that has definitely improved, and we're starting to see some really world-class operators coming into various parts of the coast.
Yeah, my wife used to work here as a town planner a long time ago for a company here. And if I said to her recently, next year we'll go to the Gold Coast a week. And she goes, I don't want to go to the Gold Coast. It's horrible. And I said, you haven't been for 2 decades, Julia. We will go to the Gold Coast. You will be surprised. And we'll come up here for a short break in the Tassie winter. And I think she'll be very surprised, particularly where I ate last night, and I'll eat tonight somewhere else. But, it's not what it used to be.
Might find yourself moving back here.
Oh, well, look, calm down. Well, I'm here quite a lot for you guys and a few others. So, I've got to the stage where I stay in some hotel and they know who I am and what room I like. And, they don't even have to record because I borrow a car, so that they even know the registration number of the car. So,
perfect.
Anyway.
So, I guess for most people, you come to the Gold Coast, you've got $3, $4, $5 million to invest. Where do you put it for the best levels of growth, and what type of product, market? What's the best sort of long-term investment in your eyes?
Well, the beauty's, the eye of the beholder. So it depends what you want to do with that. But not
a principal residence, but if you're looking investment.
Yeah, I think that you're best buying something that has preferably direct water access. And if you can't achieve that, something that's going to be very difficult, if not impossible, to be built out. And in a small project, 1 per floor, maybe 2 per floor, boutique, good parking ratio, very well designed, which is a key thing, and very well kitted out. And whilst that's an investment, you might lock it up, you might rent it out, but the market for that will increase for particularly an owner resident. I would be buying something like that. You could, in the past, if you asked me 10, 15 years ago, I would have said you would have bought, a house in an infill type location and you would see that value go up, and then you would be looking to build something on it like townhouses or something like that. But that market's gone very tricky, very hard to negotiate, very hard to do. So if you're passive, I would buy an asset like a waterfront or close waterfront apartment in a boutique.
How do you see the commercial and industrial markets going?
I don't specialise in that area. I used to in a previous life. The reason I do it is because I don't see leases. So you to really know the interplay of what's happening in the non-res market, you've got to see a lease, because what's published is not necessarily what's happening. But generally what happens is industrial follows population growth. And the other key thing is what happens in the spread of jobs and the type of jobs. So you've got a lot of professional workers here that if you went back 4 or 5 censuses before, you wouldn't have that degree of number of professionals as a percentage. You've got a lot of tech workers here. You've got a lot of people like this filming this who set up on the coast, and we're in a little, industrial area where it's perfect for that. Plenty of parking, easy to get in and out of, cheap space, and you can make it work like this. And you're also seeing an office demand. Now, the office demand moving forward will, I think, increasingly be mixed use. So it'll be like, okay, you can live in it, you work in it, you might share it. I think the days of, particularly in a regional town, unless it's a client design thing, so a major, a decentralisation of a government department happened or something like that, there wouldn't, unless it's purpose-built, it's going to have to do some form of mixed function.
Are those trends similar in capital cities, or is this just going to be something more?
They're starting to happen in capital cities, but who owns those assets in capital cities are different. They're more institutional. They move like a feet of clay. They move very slowly. And so in regional places, and the Gold Coast is no exception to that, the ownership of that are often individuals or smaller companies, and they move faster, and they're more exploring that trend rather than saying we're forced to do it.
So we used to look at a property clock all the time, and obviously it was pretty easy to follow where the Gold Coast was going and this boom bust. So it was always went round in a circle, and it feels like now that we're sort of going to be in this constant sort of state of just growth for some time. Do you want to talk a little bit about that? Or
Yeah. Okay. So there is a property clock.
Yep.
And there's 4 stages of that.
Yep.
You know, it's a spring and a summer, and making symbol it's a recovery and upturn and downturn and stagnation. So it's spring, summer, autumn, winter. Usually, what happens in the past on the Gold Coast, it's a supply-demand balance that the clock goes through. But what used to happen in the past is that it used to get either oversupplied, and you think of GFC and apartment supply on the Gold Coast.
No liquidity to pick it up.
Yeah, that's correct. And so the demand dropped, the supply was high. It took a full cycle for you to get back to again. So you missed a cycle. And that's happened in regional towns and so forth. Like this time around, it's very tight. And so you're basically going still through the cycle, but it becomes very mild. So there will be somewhere in the future what the newspapers will pick up as like crash and things like that, because it might take a little while longer to sell a certain asset. It might be weeks longer, not years longer. There might be some easing in price, not because of construction costs or anything. There just could be a change in circumstances that a certain number of types of property, usually bottom to middle market, that will come on the market because some owners are forced to sell. And that will get sorted out generally quickly, and then it'll go through the cycle again and start to improve. And it's interesting that many locations in Australia is in that recovery/upturn stage of the cycle, and there's not many here, which normally in the past, because of interest rate rises and because we've eroded savings after COVID and that, a lot of markets would be down there. And that's just simply because supply is very tight across the country versus demand.
And I'm assuming that's to do with immigration levels on a national scale, but also when we're looking at the Gold Coast, did you have roughly the stats of how many new dwellings need to be
yes, there is a need to
versus the demand that we're like. And
there's a need to build 6,500 new dwellings per year. That's assuming the population growth takes the longer term trend. At the moment, you have to build 9,000 something because the population has peaked.
And do you know how many they're actually delivering?
Oh, nothing like that. Half if that. Particularly from completions. There is approvals, but a lot of those approvals won't happen because they're large, big things, and as we've discussed, they're very difficult to deliver. So the amount of supply coming through.
Probably 50% deficit now between what they need to actually deliver versus what's actually getting built. Would that be a fair assumption?
50% since I wrote the last document for you, which was like 2-3 months ago or 2 months ago. I suspect it's 60%. Because the supply is just choking. And again, we said before about it's taking longer to deliver. Even if it's under construction, it's sliding. And so that's not happening there. Interesting with the population growth, yes, a lot of it is in Australia, it's either natural increase or overseas migration. Now, a lot of that overseas migration are students, and they are returning. There's a bit of argy-bargy now with the university saying, well, if you cut it, we're not going to get as much money and all those type of things. And there's a family reunion, and there's also a professional work classification. On the Gold Coast, a lot of the growth, there is a lot of overseas migration. But most of it is to do with interstate migration. So they're people leaving largely New South Wales, somewhat Melbourne as well, Victoria. And they might be pushed out. Some of them are being pushed out because of the amount of people coming into city from overseas. And also from the overseas category of coming to the Gold Coast, a lot of them are skilled migrants. So there isn't a big family reunion. And whilst there is some students returning, they're nowhere near as big proportion. So you could argue that from the overseas migration point of view, the Gold Coast is attracting, this sounds very xenophobic, but the better migrant.
So what is the current annual net migration into the Gold Coast? Do you know that roughly what those numbers is? It sort of around 15,000, 16,000 still?
It's from interstate. It's probably about 10 to 12. Population growth's 20,000 at the moment, and we know from COVID it increased quite a bit during COVID.
So 2021 was about 59,000. Movements, which picked up about 6 years worth of supply.
Yes, that's correct,
and that's probably been the biggest catalyst for anyone listening as to what actually absorbed any excess supply and has really tightened our market at the moment.
Very much so.
Yeah.
And also, after the GFC particularly, and there was nobody to take up that stock, new development nearly stopped.
Yep.
It happened in Brisbane too. Brisbane was always going to be oversupplied with apartments. Gold Coast, I remember reading headlines going, well, this is all over, type of thing. And 2 years, 3 years later, it's like, where's all the supply? And that's one of the things that happened with the vacancy rate.
Yep.
People say to me, it's because of COVID and people living by themselves and people put it in Airbnb. What happened was when APRA changed or put the brakes on the amount that banks could lend to investors. They said you can't increase it by 10% more each year. That was several years ago. That dried up the amount of investment lending, not only to the established market, but particularly to the new market. And as a result, with a lag of about 3 to 5 years, which is normally what happens, you saw the vacancy rates across Australia go like this. They all went like that at every one of them.
Yep.
And that was nothing to do with COVID trend or Airbnbs, because it happened in places where, say, an Airbnb market is minuscule. That's because that happened. And so we're dealing with that now.
So I think we got down to about 0.7% vacancy rate at one point, and now it's sitting at about 1.5 on rentals.
It's probably around that. But you've got to keep in mind that includes everything that's for rent, and some of them aren't. Frankly, are rentable for the price point.
Yep.
So you could probably say that's probably 30% overcooked.
Yep.
Just like you could say the stock on market.
Yep.
Some of the stock's been on the market for over 6 months, and it's overvalued. It needs a lot of work, so it's price. Slash all marketing, but it's usually price. So a lot of that stuff, if you exclude that, the supply is even tighter.
Yeah. So, Michael, what about obviously the top end market here on the Gold Coast from where we're sitting, and we have a really big market share in that space. Obviously, seems very strong. As I mentioned earlier, a large portion of the buyers are cash. The apartment market seems to be turbocharged at the moment, obviously through a lack of supply, but we're seeing prices strengthen and strengthen, square metre rates strengthen. I'm assuming that's to do with the replacement cost on new buildings and the lack of supply, as well as an ageing population that are coming off canal front homes and riverfront homes and beachfront homes into apartment style living with that interstate migration. What do you see with the trends there? And is there anything else that's sort of underpinning that and driving it?
Oh, it's the median price for a dwelling here is close to $1 million. And I had some colleagues here who said that, 4 or 5 years ago, said that's going to happen. And I laughed. I said, oh, come on, it's not going to go to Sydney. Well, I was wrong. Sydney's 1.5 or 1.6, and the Gold Coast usually tracks what happens following. And there's the number of sales over $1 million has increased dramatically. And also in Australia that's happened, but the amount of growth that's taken place here in terms of not only a percentage change, but a number change is quite dramatic. And I can't see that. Why would that stop? It might plateau for a while and so forth, but in terms of generally the proportion of properties that sell for that upper band will increase. One, because the supply is limited.
Yeah.
Very hard to create, particularly in the recommendation or suggestion, opinion about type of asset that would be better. It's very hard to supply that. It's one of the reasons I suggest, boutique apartment, southern, particularly a mid to southern coastal area, ocean view. It's very hard to produce, particularly in a boutique sense. There's not going to be thousands of those.
It's interesting, the volume of transactions that we see in the apartment market that have picked up between, if you drew a circle around anything from 8 million to 20 million, that market seems to be really strong. But even that sort of 10, 12, 13 million, there's a lot of depth in whole floor apartments in these new buildings that are selling at those sort of levels. And that trend seems to be increasing, whereas you wouldn't have seen that ever.
No, I think
years back.
I think it's largely a replacement house. That's what it is. So instead of living this way, we're living this way, and we're not living that high. And we've got what's exclusive about house property. We've got a large asset, and it's top end, and we've got view corridors, and we've got cross ventilation, we've got security, which is very important. and got enough storage and so forth. Another thing is
we're always advising, obviously, developers on that side of it around the level of amenity that they need to in order to command those prices and the functionality, the optimal sizes, so that they are optimizing these things rather than trying to maximize them and getting that right product mix and having just enough for the demand for each of that. So we're spending a lot of time with developers if we can get in right early at the planning stage and design stage, as opposed to picking them up.
I think the key success of most things is to, begin with the end in mind, which is a Stephen Covey type quote, Covey quote, but also that, long earlier that somebody like yourself gets involved, or somebody like myself gets involved in terms of talking about the market and its demands, and from a design point of view and an inclusion point of view. And it used to be the rules of the road were we're going to maximise the yield, where it's optimization rather than maximization. That's cool. It's often better to say, is there a market for 8 rather than 25?
Yep.
Because if I could get 8, I've got less sales, I've got, theory, less build, and it's going to get me more profit.
Yep.
So
I do get a lot of conversations that are sort of just more coffee table conversations these days around trying to protect the overall skyline of the Gold Coast and ensuring that we've got the appropriate setbacks between buildings and the right level of amenities and what are your thoughts around that? Obviously, it's starting to become a little bit more common now where developers are struggling to find sites, so they're putting another building up virtually right beside something else. And I know you had a bit of an opinion on that in the car.
Well, I think it's first in, best dressed.
Yep.
So if you've taken the chance, which often it is, that you've gone to an area that is, zoned for an uplift and has been enhanced by infrastructure improvements, so uplift in zoning and therefore urbanisation, gentrification of that area is warranted. So some of the owners might not like it. Well, they can move. They can move with a nice profit if they sell it to a developer.
Yep.
But if you're a developer and you've taken the punt and you've gone and built, say, a 8-story something, 1 street back from the beach and so forth, and then somebody comes along and puts in an application right next to you and it's not within a decent setback, that building has to change. It has to actually change in terms of its orientation, its setback, its size, its volume.
Yep.
It might actually only be allowed to be of X story, and so forth. So I think also that, a building code should be across Australia with climatic differences, but part of that planning / building code mindset is to say, well, we can have setbacks of this, whatever it is, but if there's something already existing there, we're going to maintain a setback that's X, or we're going to change that layout so that the view, the skyline is attractive not only today but in 50 years' time.
Yeah.
Because without a doubt, the Gold Coast is going to become what I call denser. It's going to have a lot more development in its between the coast, the backdrop and the ocean. It can't do anything else. And so you're going to see a lot more backyard homes, infill, and you're going to see more vertical building. But you've got to make sure that all works, and part of that is a setback.
Michael, thanks for your time. Obviously, we're putting out these reports now every quarter and providing them to the market, so anyone can jump onto sign up for our newsletter and get all of that information. Really appreciate you making the trip, and hopefully a lot of the listeners have got something out of this.
No, thank you very much, and thank you for the work. And I enjoy writing the reports, and I particularly enjoy having the chat. So thank you very much.
Pleasure.